So here is a short analysis from my side about the Aussie dollar USD. Well, here I will discuss the liquidity zone, importance of liquidity zones, and how shall we trade liquidity zones. You know, liquidity zone is a simply support zone, resistance zone, demand zone, whatever we call it. It is the point where you can see that the reversal of the market is highly likely. Price action, the reversal is highly likely, and it suggests that where the smart money is playing. You know, nothing here, there is nothing complicated or you can say which no one can see is there is no issue about it. We have marked this zone, previous low, previous low, previous low. You know, the price just took the support here. The bearish momentum stopped here. Yesterday, the Bank of Japan's governor's statement that the bank will depart from the previous policy of ultra loose policy of negative interest rate. It took market by surprise. Hence, we witnessed this impulsive move. Now, you never know what fundamentals have or what would be the next thing. You cannot predict the market. You can predict the zones and you can manage your risk management effectively. You can only do your risk to reward ratio analysis. Look at this. If someone has bought the Aussie dollar here with 20 pips, with 25 pips, with 15 pips, the risk to reward ratio is mind boggling. And second thing is liquidity zones are important because you right away know that you are wrong in this bet. So you can come out of that trade without being perplexed by whether it will go against your bet or not. You have defined zone, you know, you have defined zone, and you will right away cut that trade short because you know that it is not going in the desired direction. Now comes the point that this is the supply zone. This is the supply zone. We can assume, we can project, we can forecast that price will revert from here. But will you simply sell the Aussie dollar because it is at key liquidity or you mean it is at key resistance or supply zone? No, you will not simply sell it because the chart is saying that it is at important zone. It is at important zone means that it is at resistance or it is at supply zone. A price reversal is highly likely. But there is a catch here. You know, if you are breakout trader, you will buy the Aussie dollar here with the notion that it will go towards north or it will continue its bullish momentum. Someone who is looking for continuation will buy here. So here comes the point where we have to align the technical analysis with fundamental analysis. You know, the alignment is we will look into the fundamentals is you can think about sentiment, you can think about risk on risk off environment, you can also think about the important economic data originating from that country. Now, CPI data from US is due on Wednesday. There was no, I mean, important data from Australia yesterday. But today, two important data were expected from Australia. First was Westpac consumer sentiment, which is not which is of low impact, and it was below the expectation. But NAB business confidence is better than previous. So now it is giving you a mixed signal, you know, and that's why we are witnessing this, sideways or ranging ranging price action. What I want to convey here is that yes, we will buy at the liquidity zones. Buying the support is better than buying the resistance. Is far better than this is my experience over the years is that buying the support is so important. It's so rewarding than the buying the resistance. Number one, no matter how luring the fundamental data is. But equally, we have to take into consideration that with technical analysis, we have to align fundamental analysis. Now, if this business confidence number would have been uh, not as not better than expected, or it was if it was a decimal number, you would never have seen this bar. Simple. So many people in this space are complimenting or commenting about the technical aspect, technical side of the analysis. No, we have to align fundamental analysis. I can bet you that you would not have seen this bar, this green bar, if the business confidence number would have been deteriorated. So look at the importance of liquidity zone. Here there is a sell side liquidity, but there is a catch. Whether you will sell it here or whether you will buy it, that would be aided by that your analysis, your position should be supported by fundamental analysis. Here in this case, you can see that the business confidence number is better than the expected. Last time it was 1, this time it is 2. So it is better than last time. Business sentiment is improving, you know, and that would be reflected here. So, technical analysis gives you the precision in your risk to reward analysis, in your risk to reward analysis. But at the same time, you have to see the fundamentals, you have to see the economic data, you have to see the geopolitical environment, you have to take into consideration the analysis or the statements from the key stakeholders. With all these considerations, when you take your trade, the chances, the probability of success would be more, you know. So I'm not expecting any movement, any any considerable movement in Aussie dollar USD because of this data, as there is no major data is expected from Australia today. So we will see this ranging environment. It will not provide you the better opportunity. It will not give you more pips here. As a swing trader, as a day trader, I'm not seeing it as a highly rewarding setup. You know. Thank you for watching. This is from my side.